Good morning. You've tuned into ET Now. This is Buy Now, Sell Now. I'm Karunya Rao, and kicking start the show. Then we're looking at a very firm uptick coming in for the benchmarks, and even broader markets are picking up steam quite a bit. SENSEX is up 1%. Even Nifty is up over 100 points at this juncture. So let's keep this market chatter going. Welcoming in our guests for today, Aashish, Kapoor, and Kunal Bothra, who are joining us right now on the show. Before I take it across to them for their market views, let me bring on board my colleague Ajay. He's here with an update on Reliance's 13th check coming in. Ajay, what next should we expect, and tell us what to look forward to the AGM as well.
Well, the latest one is Qualcomm, the American telecom company, technology and telecom company, which has a lot of prowess in the 5G area of technology, is the latest investor as far as JIO platform is concerned. Just closer to 800 crore is what they are investing for 0.15% stake. And this comes in, going into the AGM, where it's widely expected that once these marquee investors money have actually come in, what will be the roadmap from here on? And Mukesh Ambani's speech in the light of these big investors, not only technology companies, social media majors like Facebook, Qualcomm, Intel, but sovereign wealth funds which have actually invested now totaling 1.18 lakh crore in a matter of weeks has poured in as far as Reliance Industries is concerned, making it net debt free, way ahead of the target. Remember, last AGM is when they had set out this target of becoming net debt free, and they've achieved it before the AGM. In fact, March 31st, 2021 was the target date which they had set for themselves. They've achieved it much before, and now the entire architecture is in place. Big investors have come in. So what will be the roadmap from here on is something which everybody is eyeing. So it's again a very big endorsement. The quality of companies like Qualcomm which are coming in, they will no longer only be financial investors. The street expects them to be strategic in nature, and the inputs and partnership with the telecom and technology JIO platforms will actually play out, and the benefits will likely to accrue to shareholders in the coming years.
Good morning, everyone. I also made it a bit late this morning. Earlier in the week, we caught up with Rahul Bose regarding so many things, his new venture, 2 NGOs that he runs, which is the Foundation and HEAL. We also caught up with him on his fitness and sports ventures, and he was a vibrant rugby player at one time and actually represented the Indian rugby team as well. So a very colored individual, had a lot to say and some really interesting insights. Do hang on for that. Stay tuned. We'll bring some more later on in the show. With that being said, let's also bring up our stock cloud for this morning, which we'll be addressing. We've been doing for various reasons. We bring up the stocks that are in focus. So obviously beginning with RIL, needless to say, already got a new check-in, making a new high, and close to that 2,000 mark, which should be absolutely monumental for Reliance. Tata Motors on the back of what's happening with them in the auto industry. DMart on the back of really weak numbers, but still the stock not taking as big a beating. Wipro on the back of all the opportunity available in IT and results coming soon. IRCTC on the back of some pretty strong results that were delivered, I think, on Friday or over the weekend, if I'm not mistaken. Profits jumping 4x. Yes Bank on the back of its big FPO issue, which kicks off today. It's going to be a 15,000 crore issue and garner a lot of interest from marquee investors. So watch out for that one. It's happening at half the current stock price of Yes Bank as well. You have Biocon because it's become an absolute leader in pharma, and there's so much happening with that company. SAIL on the back of recovery in the steel sector. We have Lakshmi Vilas Bank on the back of results, and obviously some M&A activity as someone comes up and tries to maybe put in a bid for their license. And IRB Infra on the back of a sharp move seen in the infra sector. So those were the stock cloud for this morning. Let's now move forward with our guests. I think Kunal and Aashish are both with us. So good morning to you both. Kunal, this market looks like, it's got a mind of its own, and we're now coming back to 11,000. I mean, it's almost as if COVID didn't happen. So what's looking interesting to you, and what are your thoughts and feelings on the market this morning?
So I think completely different. I mean, the thoughts are different and the feelings are completely different, Varun. The market are going into a different orbit altogether, and it's difficult to judge these kind of irrational times. So even if it's euphoric, even if it's momentum, call what you may want to, but there is no reading as such, or there is no indicator as such which gives you a top of euphoria. So you have to play the momentum till the time the markets doesn't roll back and hits those trailing stop losses or those key support levels. So I think in that regards, it's a market which is still buoyant. Yes, today I think it's a bit different because yes, on one hand you can see that the Nifty is up 100 points, but the Bank Nifty is struggling clearly. I think if I'm not wrong, the Bank Nifty is also down more than 50, 100 points. So at a time when you are expecting that the Nifty is trying to claw back, trying to gain its strength, coming back to its 200 moving average, also trying to test its psychological 11,000 mark as well, it doesn't have the support of one of its strongest or the higher weighted sector. And I think that's a bit of a concern or a problem for the index. So we need to see whether over the next 1 or 2 days, if the index remains at these levels, whether the Bank Nifty performs or not. So one has to be a bit wary in terms of the mixed signals which are being shown on the markets. But I'll go with a couple of buy calls and expecting that this momentum could probably continue for the Nifty stocks and devoid of the banking names. So two names in that regards. First one is about Bharti Airtel. The stock again finally managing to come back about this 575 mark, which I believe is a very crucial hurdle for Bharti Airtel, and I sense that if the stock manages to cross back about those kind of levels, it could trigger some bullish breakouts on the hourly time frame chart. So buy on Bharti Airtel with a target of 600, stop loss to be kept at 567, and the second would be buy on Tata Steel. Again, I think metal stocks are trying to make a good comeback. Many of the metal counters like Vedanta, etc., have picked up good pace. Tata Steel has been trying to show those signs of breakout, but it's not provided those kind of strong breakouts which is needed for a large cap name like itself. So I believe that maybe over the next couple of days you could see a breakout on Tata Steel as well. Hence a buy with a target of 366 and stop loss at 335.
Aashish, hi, morning. What are your wealth creation ideas?
Well, I have two wealth creation ideas. I think the time is very important to focus on quality and look at stocks where the growth is visible, because clearly markets, while showing a lot of euphoria, and while I buy the argument of a look through year, I think even then, I think the markets are now clearly racing ahead very fast, and so therefore time to be very careful. So I have two frontline stocks, and both of them have very visible, strong earnings growth. One of them is Bharti Airtel, common with Kunal, Bothra. Now Bharti Airtel, not a longer term view, you could buy with a target of 750. Now 750 is the sum of parts valuation which we arrive at. But positive thing about Bharti is that results have been very good, better than expected, growth on all fronts, revenue as well as EBITDA. And ARPUs have also shown a very significant improvement. Now, Bharti Airtel, what is very good is that telecom is one of the very few sectors which are actually gaining in this lockdown period. And going forward, the digitalization momentum is likely to pick up more pace. And Bharti Airtel seems well capitalized to, seems well positioned to capitalize on this transformation. Also, their growth is across their telecom services as well as home services, digital services. So a very, I think one of the very safe and good stocks to buy, and the target is 750, which represents about a 30% upside with a 1 year's time frame. The other stock idea is HDFC. And HDFC Limited, again, the visibility in earnings growth is very much prevalent because home finance is one of the few sectors which are still showing a robust growth. And what has happened over the years is the consolidation has happened in this space. And with HDFC being a very clear established leader, the company also has the advantage of very low cost of funds, a very well managed ALM position, and a very good distribution network across the country. Company's valuation also derives from the various subsidiaries, and if you total that up, then the sum of parts valuation comes to 2,500, which again represents a fairly good about 30-35% upside from the current price. And the subsidiaries, all of them are doing well. HDFC Bank, HDFC AMC, HDFC Life, HDFC Ergo, and the stake in Bandhan Bank, as well as the HDB Financial Services, an unlisted consumer finance company. So altogether, HDFC I think represents a very good, easy stock to understand, and when very fundamentally very strong. So that will be the other idea. And yes, the market momentum is strong. So in all probabilities, the market will go higher. But I think going forward, the market will get polarized in favor of high quality names. So very important to go with only the stocks where the earnings visibility is there and the balance sheet position and the strength of the business is very well established. So with that in mind, I think both Bharti and HDFC are both very good ideas which investors can buy even at the current rates.
Okay, thanks Aashish for that. Let's start off with some of our viewer emails and Twitter queries. First up, we have a Twitter follower who says he would want a view on Bajaj Finserv from the current juncture, should he perhaps look to dip into it. Kunal, the stock has seen a fantastic uptick in the last 3-4 weeks, almost 30% gains coming in there. Is this a good idea to sort of enter into it right now at 6,500 levels?
Well, I will say wait for a certain bit of time. I think Bajaj Finserv, Bajaj Finance, they have shown signs of promise. They've shown signs of very strong price recovery. I think if I'm not wrong, both of these stocks have almost doubled, from their March lows. So I think in that regards, it's been a very strong recovery. But then on the other end, when you look at it from the, for example, for Bajaj Finance, from those 10,000 levels approximately, the stock is still at 6,500. So it's still at a 30-35% discount or a downside from its 2020 or all-time highs in that regard. So not everything has turned out positive for the stock price. Provided if you're and assuming if you're a long-term investor, then I think you need to buy the stock, especially when it goes through one more round of very strong kind of correction. What's actually panning out in the markets as well is a bit of dichotomy where Nifty on one hand is going up, but the bank Nifty is struggling. So whenever this kind of a dichotomy settles down, you generally see one or the other index or both of the indices moving in the same direction. So assuming if the bank Nifty heads downwards further, and if you see pressure in the private sector banks, it's bound to be that the Nifty 50 as well and many of these other large cap names, the ones which are late movers, they would also try and correct. So I think in that regards, you should wait for a certain bit of time to before you enter Bajaj Finserv. In terms of levels, I believe the sub 6,000 level, I think 5,800 or 5,900 level is a good starting point where you can look to start chipping into Bajaj Finserv, provided you have a longer term view on the stock.
Okay, thanks for that, Kunal. Aashish, what's your take on Bajaj Finserv?
Because of two reasons. One, of course, is that it's very well established and the clear leader in its category. And the other thing is that one of the segments which is going to continue doing well would be the insurance going forward. So the sector-wise also we are positive, and I think the stock is clearly one of the best managed in the industry, both insurance as well as consumer finance. So I think though valuation wise one can argue that it would have become expensive after the recent run up, but I think from the point of view of investor buying, is still one of the safer stocks and also where growth visibility is there. So I think not only can the investor hold on, can also buy more at the current price. And I think over the years, I mean, it's difficult to duplicate what it has done over the last 7, 8, 10 years. But clearly, growth visibility is there, and a very comfortable and a good quality stock to have in your portfolio.
Okay, great. Let's move on then. The next query is for Biocon, and they need a short-term view on Biocon, and this is Arco Fernandez from Kochi. So Kunal, coming back to you, how's the chart looking?
Well, again, short-term charts for Biocon, they look attractive, but it's a bit stretched up. I think today also the stock opened with a decent kind of a gap up. I think it was at 444, 445, if I'm not wrong, at the opening tick, and it's now gone down or come back to a flattish kind of a territory. So such kind of a move where the stock opens 7-8% higher, 9-8% higher, and then ends up or settles down into a flattish kind of range, then the candlestick patterns which get formed on the medium term charts, they are not very attractive, and it doesn't leave too much room for short term traders or investors to try and make decent money or decent gains out of such kind of stock. So it's a good stock from a long term view. The chart patterns are very strong on long term basis, but then if you're a very short term investor, I for one believe that maybe this is not the right time where you should be looking at Biocon as a good entry point. I think if the stock comes back to a 400 level or maybe a 385 kind of a level, then it probably attracts or warrants a good risk reward buy. I think at these levels of 420, the risk reward is almost 1:1 or maybe less than 1:1 in favor of long. So I think in that regards, I will suggest wait for maybe a 385 kind of levels where you can probably try and look to start trading Biocon on the long side.
All right. Okay, then let's start off with the next viewer query. It's an email. Arco Fernandez from Kochi has written to us. He wants a short-term view on Biocon. Aashish, would you like to step in for Biocon first? How are the fundamentals looking like? It's a very niche player within the pharma and life sciences space. How do you sort of go about investing in this one over the short term? Good idea right now?
No, I don't think so. I think Biocon, apart from the fact that it is in a sector which is currently the focus, that is pharma. But apart from that, I think I would agree with Kunal that I think the stock hasn't really delivered well, not only in the short run, even in the long run. It is one of the laggards in the whole pharma and life sciences space if you look at it. Over the years, it has never really delivered. It's always looked potentially very good, but never really delivered. And so I think within the pharma space, I would prefer a Cipla followed by a Lupin or a Sun Pharma. Clearly, I think that these stocks have given investor returns and are favorites with the quality investors. So I think for whatever it may be, I think Biocon has always sort of never been able to live up to its potential. So from my point of view, it is a clear avoid.
Okay, thanks Aashish, and with that, thank you to you both, Kunal and Aashish, for joining us this morning. We're now done with our queries. Let's get a move on. There's been a big downgrade at Morgan Stanley, and India has now been moved to equal weight. Pankaj joins in with details on that.
So, let's first look at what has happened. Jonathan Garner, who of course is the emerging market strategist at Morgan Stanley and Asia Pacific ex-Japan analyst strategist, has downgraded India and upgraded South Korea. The interesting thing within the note is that China, which was already an overweight despite doing very well, is further upgraded to an overweight as far as this is concerned. But their basic call remains that developed markets would continue to do better than emerging markets. Now, India has been downgraded to an equal weight. Now, some of the key reasons that I would like to say, detailed from the report, that why India is downgraded. So Indian macros are not looking great versus the world. Indian return ratios, Indian margins, India companies' asset turnover will probably take much more time than some of the emerging markets to recover. As far as emerging markets are concerned, they believe that India is slightly not favorable at this point of time versus its peers in terms of recovery, and that's why they believe that after the recent run-up, it's best to be equal weight. Even their Indian strategist, that's Rhythm Desai, he has just a 4% sort of upside to the base case scenario, and that's why after the up move, they believe that it should be an equal weight. Again, it's not a sell, it's not an underweight that they're talking about India, but it's largely equal weight that essentially they have got through as far as India is concerned.
All right, Pankaj, many thanks for joining in with that update. Earlier in the day, we spoke to market veteran Nilesh Shah and tried to understand whether or not the markets are poised for a recovery in the coming quarters. He also remains positive on the IT space, and he's looking for opportunities in the rural economy as well. Here's a slice of that conversation.
Yeah. So I think really this has essentially been a market all about recovery, revival, resurgence, rebooting. And of course, what's really helping us essentially has been very, very strong. But clearly, I think, and I think also the market is shrugging off the initial results which have poured in of Q1. And at this stage, obviously, the market is probably thinking this to be exceptional items in a way that when you have a company which goes through an adversity and it basically kind of marks something as exceptional, the market after a point of time tends to basically kind of overlook it or move on. And what it looks like, I think, is that yes, while the Q1 results are not so good, the start is not so good, but they were expected to be not so good. And clearly the market is now wanting to kind of look beyond the Q1 or the H1 of this financial year and see how essentially you're going to have a recovery in H2. And the expectations are that the H2 will essentially be with a big bang. So clearly, I think the markets at this stage are more focused on H2 of this financial year and maybe even the next financial year, which is the financial year FY22. I think we have to also keep in mind that what caused that huge fall in March was essentially around the virus and more around the lockdown. Clearly now I think there seems to be a consensus that yes, of course, the virus is going to stay with us for some time. But maybe sometime a few months later, there is going to be some kind of a remedy which is going to come in. And there is not going to be a nationwide lockdown. There are going to be pockets of lockdown, and maybe they are not going to be lockdowns which are going to extend into months, but maybe lockdown which probably will last for a few days or a few weeks, and that too in some pockets. So I think on the whole, what it looks like is that both from an economy point of view, as well as from a markets point of view, maybe the worst is behind us. And I think really the markets are more focused on how things will unfold over the next maybe 4 to 6 quarters.
Time to slip into a quick break here and buy now, sell now. Plenty lined up when we come back.
Welcome back. You're still watching Buy Now, Sell Now. Let's talk about some stock-related developments. You have D-Mart that delivered its numbers on Saturday. Well, we were expecting it to be a weak quarter given the entire lockdown and its subsequent impact on all the key retailers. But the numbers have actually been weaker than expected. While the revenues were in line, profits and margins are the ones which are really weighing heavy on the investor sentiment as well, even at the moment. Margins came in at 2.8%, very much below what we were expecting. Profits are down 85%. What also seems to be weighing down the sentiment right now is the weak and cautious commentary for future as well, because given that the trend is right now towards essentials, towards FMCG sort of products, the purchases and the demand for non-discretionary high margin yielding products will be low in the coming quarters as well. So the gross margins are likely to be negatively impacted even in the quarters to come. In fact, management says that there has been a negative impact on footfalls and sales, not only during lockdown, of course, but even now it continues to be quite weak. Outlook very, very uncertain given how the scenario is panning out. Store operations continue to be inconsistent. Lockdown restrictions and norms also have varied from different zones. So wherever the stores are allowed to operate unhindered, they've recovered to 80% or more of pre-COVID level sales. But definitely the tilt is towards low ticket price products and essentials. If you look at the brokerage or the investor community as well, there have been no real red flags at this point of time or no downgrades as such. But yeah, for instance, they believe that FY21 trends will be weak given the restriction on store operations. But yes, they will be focusing on delivery now, which will be key. They believe an increased focus on online delivery could help the company, which they are planning to scale up, and they have mentioned that in the press release as well. The ownership model and strong focus on cost efficiency continue to be imperative, and they will be actually helping the company get less impacted, if you compare it with other peers. So that's the verdict on D-Mart. The stock, however, sulking big time in trade, down almost 4%.
Right, Karanya. Quite surprising how it recovered though from the extreme low of the morning fairly quickly. But with that being said, let's get on a move. Yes Bank FPO will kick off today, and the price is a substantial 55% lower than the current market price. So this is what kind of sent those shares into a tumble last week. The second investors found out that the FPO is going to be priced at 12 to 13 rupees an issue. Now, share, excuse me. Now, this is for a $2 billion share sale, so 15,000 crores. It's no small amount. Let's remember there's one glitch for Yes Bank. The last time private banks raised money and invested in Yes Bank, what happened was that they were supposed to hold their entire investment, and we were assured that they wouldn't sell. Now, although a certain portion of their investment was locked in, there was selling on behalf of private lenders. So there is an element of profiteering here, and one wonders whether all these investors who are being allotted shares at 12 to 13 rupees a share, now will they also look to do something similar if we see a slight rally in the price. However, the management continually assures us that that will not happen. That's what was said to us last time as well, but it did happen. So it's just something to keep an eye out for. That being said, you can't turn away capital right now. Every bank needs money, and it seems that marquee names from both the domestic institutional sphere as well as foreign institutional sphere are lining up for this issue. So should be fairly interesting to see how it closes. Karunya.
Okay, from losers then to gainers, you also have Biocon. That's very much in the spotlight. They've got a regulatory nod to use drug on COVID-19 patients. Vivek is standing by for more details on that. Vivek.
Well, when you're talking about Biocon, this is the first biosimilar company to go ahead and announce, and has actually also gone ahead and received the nod from the DCGI. And this is for the launch or the emergency use of one of the drugs that is already part of the company's portfolio. Now, the drug that we are talking about is called itolizumab, and this particular drug was used earlier in the treatment of mild to severe psoriasis. So skin infection drug is actually being touted now as a drug that can, with a little bit of tweaks and modifications, that could be used in the treatment of COVID-19. Now, how this particular drug is used is that it is used only in moderate to severe cases of COVID-19, given the fact that it slows down the immune system. Biocon and what Kiran Mazumdar-Shaw is saying is that at this point of time, this is a very significant development. Test results have shown both strong efficiency as well as efficacy of the drug. And the other thing what the analyst community is noting is that the market size for this particular drug can be quite high. However, they do draw caution to the fact that at this point of time, given the fact that the test population was quite small, they believe that there should be more tests done, and they at this point of time they're still awaiting whether widespread use of this particular drug can be seen going forward.
Okay, thank you for that, Vivek. Let's now get a move on. We have a very special management with us, the management of Rossari Biotech, whose IPO is also in the offing and should be concluded fairly soon. And we have Mr. Sunil Chari, who's the MD at Rossari Biotech, joining us this morning. Thank you so much for taking up the time. We've read a lot about the issue and a lot of investors have heard about it, but let's just begin on that ambitious note. You're doubling capacity right off the issue. That's what some of the proceeds will be used towards. How confident are you that you can fill this capacity within the next 1 or 2 years?
Went on a blue ocean strategy where we went into areas where there was no competition. Because we were small, we did not have capital. And in our MBA days, we were taught that you can have 3 planks for business. You can either be a low cost, you can be quality or differentiation. So right from day one, we choose the differentiation path because that is where we could be seen and we could make a place for ourselves. And this strategy has been very successful. We would like to continue this strategy of differentiation. Promoters of Galaxy, G. Ramakrishnan, and Fine Organics, Mukesh Bhai, they are my mentors. I touch their feet, and they have been guiding us, on our IPO plans. So we look upon to companies like them. We had our basis is intelligent chemistry. Using that to make customizable solutions which value add to the customer. So we do, work on the intelligent chemistry a lot. We have a lab in IIT Mumbai. We are probably the only chemical company who has a research center in IIT. And we have 40 scientists working there. and we'll continue to come up with a lot of solutions. We have more than 2,000 products. So other companies believe in large plant, large capex. We believe on smaller plants, focusing on core chemistry. So we have 4 basic chemistries: enzymes, silicones, acrylic, and surfactants. So we would like to be around these adjacent chemistries.
Peers for your products. Could you tell us a little more about your key focus areas?
Last 2 years, our capacity utilization is more than 90%. The demand is tremendous, and with the health and hygiene focus, we do not want to go to a cinema hall or a marriage party or a club, or a gym or picnic or vacations or restaurants. And the focus is now on health and hygiene. And we are in this industry. The industry has a very exciting picture, and we are very sure that we will fill up the capacities fast.
All right, so coming back to that capacity question, you're doubling capacity with the proceeds. You mentioned you're currently at 90%. How quickly can you fill this new capacity that's being added?
About 42% of the proceeds will go into retiring long-term debt. As a company, we have been zero working capital. We were zero CC in the last 2 balance sheets, and even on 30th June. And about some part will go into about 35 crores will go into general corporate purpose, and 50 crores will be for working capital requirement for enhanced growth.
All right, Mr. Chari, great chatting with you. Thank you so much for giving us a glimpse of what the company is all about in terms of its offerings and who are the competitive peers. Moving on then and taking a short break here, we have an exciting conversation lined up on the other side. Stay tuned.